pressure, but I am now recording. I'll count.
Up.
Is it going?
Yeah.
So it'll count down, and then we'll start counting up once it hits 0.
Okay.
Whenever you are ready.
All right. So Scott and I just wanted to start a little podcast to help our old and new clients kind of navigate through the home buying process as well as selling. We've worked together the last several years.
Yeah, several years, quite a few years.
Yeah. So we've seen a lot of good things, and we've seen a lot of things that we've seen our clients go through that have been hard, and we want to try to help them navigate through that and how we can help them avoid some of the pitfalls that we're seeing a lot of.
Hope everybody can kind of learn some things as we share some of these funny experiences we've had with some of our clients, because sometimes it gets crazy when you do real estate.
Yeah. Well, and the loan.
Yeah, it definitely does. You never know what's going to happen sometimes.
Yeah. So I'm just going to take a quick second and introduce myself. My name is Miranda Jones. I work at Equity Real Estate here in Utah. I've been a realtor for just over 10 years. I started real estate down in Las Vegas as kind of a dare at the time. Once I started doing it, I realized how much I loved helping people find their dream home, live the American dream. It was actually kind of a really gratifying process. Back in 2017, my husband came to me and said, "Hey, I want to move up to Utah. I want to start a company up there." And it took him about a year to convince our entire family to do that. But we moved up here and we've loved it ever since. Utah's beautiful. I grew up here. So it was fun to come back home, and we know that Utah has so much to offer so many people. A year later, we moved in 2018, and we've been here ever sins.
Tell me a little bit more about this dare. Like, who dared you to get into real estate?
So I had a really good friend who was my broker down in Vegas, and she said to me, "You would be really good at real estate." And I was like, "No, it seems like a lot of work." But she kept telling me I need to do it. And so one day I just did all the classes. I didn't tell anybody. I just did them all. Took me about 3 months. And then after I took the test, I said, "Hey, would you be my broker?" And she was like, "Are you serious?"
Nice.
And so she just said I was good with people, and that's kind of how it started.
Awesome.
And it stuck, which has been great. It's been a great opportunity.
Awesome.
So,
well, I'll have to say you do an incredible job for your clients. So you're very good at it. I'm glad you got into it.
yeah. So
Yeah.
I have 4 kids. I have 2 kids that are grown and on their own, and 2 left at home. And I think that they're surviving my husband and I. We're not surviving them.
Yeah.
I've been married for about 26 years, and I feel like we've made a great life. I love it here.
Awesome.
I love real estate. I love people, and I love the relationships that I've been able to make along the way, because they definitely, you don't realize in this business that you build relationships, close relationships, because you have to learn so much about people.
Yeah, I think clients become like almost friends, like, and they'll call you like 10 years later even, and you're like, and you feel like you're still their good friend. Because I mean, buying a house is like it's a process, and it's like a very personal thing too. Like, it's your biggest, purchase that you make in your life. And so buying a house is, that sticks in your mind of like that whole process. And so.
Yeah. And you start, sometimes they're newlyweds and now they have kids, and their kids, and everything about them.
It's crazy.
So it's a great way to feel like you are making a purpose, or you have a purpose and you're making a difference, I should say, in life.
Yeah.
So.
Well, I feel like everybody has like a kind of a crazy story of getting into real estate, and the same with me when I got into mortgage. So I'll kind of share a little bit about me. I'm with Infinity Mortgage, Scott Phippen, and there are very few people that have just like go through college and say, "I want to be a mortgage broker" when I get done with school. Like, I have not met any mortgage brokers or mortgage loan officers that was kind of like their path. It was always kind of like this crazy story that they were doing something with somebody and then they somehow got into it. And then once you get into mortgage or real estate, it seems like it's really hard to get out of it. If you enjoy it, if you love it,
Yeah.
if you're good at it, like you stay in it because it's fun, it's exciting, there's lots of ups and downs, the market changes around and everything. But for me, it was a similar kind of crazy story. I was working with a guy, and he turned out to be a total fraud. But while I was working with him, I was helping him buy a house, actually.
Oh,
and so I was talking to these mortgage guys the whole time. And then when he turned out to be a total fraud, this was when I was still in college, really young, and I was like, man, I need a job, and I need to finish going through school and everything. So like, man, these mortgage brokers seem pretty cool. Like, so I literally went into their office and said, hey, can I become a mortgage broker like you guys? And I was like, and they were like, no, you have to have experience. We don't hire anybody. And I went back like 3 times.
You did? And they turned you down?
They kept turning me down because I didn't have any experience. And so the owner's like, okay, I'll let you do it, but I'm not going to train you. I'm not going to teach you anything. You're just going to have to do it all on your own. And I'm like, okay, I'll do it. And that's how I got in the business.
And you were their top salesman that year? You were the
I don't know if I was
year?
the top, but I did really well the first few years. There was another young guy that I still talk to. We started together at the same time. And so I was in college. And so yeah, I worked with a couple mortgage companies, and then I never had a boss that I really got along with very well, or that didn't seem like there was always something weird going on. So in '99, I just like, I'm just going to do my own brokerage, and so I started my own mortgage brokerage in '99, and I've been doing it ever since. You know, there's been some crazy ups and downs in the market, but yeah. So
you've lived through all of it. You lived through the short sales. You lived through the
everything.
downfall.
I kind of survived the crash back in 08 and 09.
And you made it.
I made it. I'm still here. So
and you still love it. That's another thing.
Yeah. I most days I really, really enjoy it. So yeah, I've been basically almost 30 years doing this. So I enjoy it. And but yeah, that's kind of
that's awesome.
My background of getting into mortgage. So.
Well, I feel like everybody has a story.
Yeah.
Let's be honest.
Absolutely. Yeah. So let's dig into a little bit about what's going on in the market. Like Utah, you know, it's an interesting real estate market. What are you seeing out there as far as the market? Is it a buyer's market, seller's market? Like, why would somebody, you know, want to buy a house in Utah right now? Like,
well, Utah is one of the fastest growing states. We get a lot of people from outside, and people love it here. Utah has a lot to offer. It's beautiful. It has mountains. It has, you know, summer, good fall. I mean, like, we have all the great seasons, and I think people are nice here. I feel like it's a great state to come to. And I think that's why we get a lot of people. But Utah, as we know, even back in the fall, the crash, we were one of the better states through that whole process.
Yeah, absolutely. You were in Vegas during that time, right? So you experienced, like, Vegas was like
a nightmare.
One of the worst markets. Florida, Vegas. So you saw, and like,
Vegas took a long time to recover.
Yeah, like I remember hearing about Vegas and like all the new neighborhoods, and like values were like half of what they were and that kind of thing. And
and I lost my house at that time in Vegas. I mean, I had to short sell mine. We had one in Virginia because that's where we moved from, and I had to short sell that one. That was hard. That's hard pill to swallow when you are losing something that you've been a part of.
I think that gives you, though, some good background and experience that gives you just a different perspective to help your clients. You know?
Yeah, it's definitely a sympathy thing, which is great. So, but Utah market's great. We see the houses are selling, people are buying.
Well, what about, you know, like, rates are so high. Why would I want to buy now? Like, why would somebody want to buy now with rates being high? Everybody's talking about how it's unaffordable to buy and stuff. So what's the deal with, you know, why would you want to buy now? I mean, why now?
Well, I think that right now, I will say every time's the best time to buy. Why do I say that? Is because you're making an investment in yourself. You know, it's not something you're going to lose money on. We've seen a trend in the market that's just gone up and up.
Can you talk a little bit about appreciation? Kind of like what are people seeing in Utah over the last several years?
Appreciation? Utah's probably one of the best states for appreciation, but we've seen a steady growth. This year we're looking at 4 to 5% is what we've seen. And
that's what I've seen.
I have clients that lived in their house for, 6 months to a year, and they've already had so much equity in it they want to upgrade. Yeah. And that's the thing that we have to look at.
I mean, I have a family member that's lived in a place for 1 year, and now they're moving, and they have like $30,000 in equity. Like, you normally can't do that, but in Utah, like, this is happening right now. So appreciation levels are kind of crazy. Like, 2020, 21, like you're 10, 11, 12, 15, 20% in some areas, but like, you can always kind of count, I think, if you look at 5, 10, 15, 20 years, you can always count on like 5%, you know. But what's the median price right now?
So the median price right now here in Utah is just over 600,000. It's 613 to be exact. Price per square footage is about 250. We are seeing an average days on market about 62 days, which, I mean, in the real world, that's not very long.
That's not very long at all. Like by the time you get the house ready to be listed and you prep everything, it's like you almost need that much time to think about getting another house, closing, moving, that kind of thing.
Yeah. So not too long ago, we had a client that put his house on the market out in Grantsville. And there was so much anxiety around it for him because he just kept thinking, oh, it's going to, is it going to sell? It's going to sell. And it's funny because as an agent, I know it's going to sell.
Yeah.
I know it's going to sell. I'm not as connected to it because I know I'm doing my job right. But it took, I think, 2.5 weeks for us to get an offer. And during that time, he would call me most days and be like, do you have any offers yet? Do you have any offers? And I think just being able to talk to clients and help them understand what it looks like to have a house on the market. He was great. Every day he was vacuuming his house. He's like, I'm done vacuuming my house.
Gotta love clients like that keep it clean.
Yeah. So I think that I can relate to that part of it and hopefully help them feel a little bit at ease to be able to know that this is normal. Like your house being on the market right now for 2.5 weeks, it's normal. Yeah. And houses do sell. They do.
Yeah. I mean, I've had several clients buying right now. I mean, some people think January and February it's really slow, but there's a lot of activity going on right now.
Yeah.
And I had a few clients with, they were dealing with multiple offers. Although I think it's still a buyer's market, like things move if it's priced right. Like, another agent I know had a listing that, cash offer in like 7 days down in Provo. And so, but why? So when you say buyer's market or seller's market, can you explain that to?
Yeah. So when we talk about a seller's market or somebody that is hoping to sell their house quickly, let's just say that.
Yeah.
So seller's market is where you have so many offers.
You have all the control.
You have all the control. You can ask for the moon. And buyers are conceding to that because they want to get into a house. And that's a lot when the inventory is low. Mm-hmm. And we still have low inventory right now. But you have basically the power to get and do whatever you want.
Like you get off multiple offers and you can say, I want this one, pick the best one, that kind of thing. Okay. So what about buyers?
Well,
like
a buyer,
buyer's market, like
so then it's just
that?
Flipped. It's just flipped. Now the buyer has more of the power. Now they have the control to say, hey, if you want me to buy your house, I want X, Y, and Z. So I would say right now, I don't know that we're in a buyer's or a seller's market because I'll say this. If you price your house right, it will sell.
You'll get multiple offers.
Yeah.
Yeah.
And you'll get really what you want.
I think it's a pretty good place to be, right? Yeah. Like if it's a seller's market as a buyer, the house is you multiple offers, you may have to offer 10, 20,000 over. You may have to cover, like if the appraisal doesn't come in, you may have to cover the difference, right? And then if you're a buyer, I mean, if you can't ask for any concessions or take time to do the inspection, that kind of thing, then that's not good. But I think it's kind of both ways. I think it's kind of equalized right now between the buyers and sellers.
And I think everybody's kind of happy with where that is because everybody's kind of getting what they want.
Yeah, and we talk a lot about with our clients, like, should we wait? We'll talk a little bit about interest rates soon, but I think what's important to note is every 1% the rate goes down. Mm-hmm. In the U.S. nationally, there's like 5 million more buyers come to the market. That's the whole country. But so a lot more buyers come out. And then what happens is then there are a lot of buyers fighting for the same listings. And then it turns into a seller's market. So
we've had clients. You and I have both had clients that have been in a seller's market because the interest rates were low.
Yeah.
And we felt like we were keeping our head above water trying to get these people in houses.
Yeah.
Because
we were tough.
I mean, you have some people that, they only qualify for this much money. Mm-hmm. And other people that can go up more. And so that was hard. But talk a little bit about interest rates, because we've been through
Yeah.
the low and the high of them.
Yeah. So interest rates were low for a long time. Like, they were 3% something for a long time, and people got used to it, And then, of course, during COVID, rates came down like low threes, even 2.8, something like that. And so everybody, changed their rate to that refinance, or when they were purchasing, it was they could get a good rate, but it was tough to buy a house because there were so many buyers. And then everybody knows, over the last couple of years, rates went up a lot, and we'll talk a little bit about why. But when rates go up, it's hard to afford a house, right? So people think, okay, well, and we got as high as like in 23, as high as almost 8%. And so that made affording a home a lot harder, So people are like, I'm just going to wait till rates come back down. And a lot of people were talking about rates coming down a lot in 24 maybe, but it didn't really happen,
Yeah, not what we expected.
Yeah, so rates kind of they came down a little bit in September, pretty low. Maybe I think we got some sixes, low sixes and stuff like that, 5.99. But then they went back up to close to 7. But the reason that rates didn't come down as much as we thought they would be is just because of all the money that was being spent by our government. Inflation and the spending. It caused a lot of inflation. Inflation's high, rates go up, and so the Fed is, we're trying to see what the Fed's going to do. I was going to mention a little bit about, like some people will hear about Fed lowering the rates.
Well, so I get that question all the time.
Yeah, like
I get a call. Hey, I heard
Fed
they
lowered the rate.
tell me what the rate is so I can get in.
Yeah. So when the Fed funds rate is separate than the mortgage rate. So like what the Fed funds rate is, it affects like your HELOC, your credit cards, personal loans, car loans, things like that. So if they lower a quarter, so like in September and September, November, December, they lowered each a quarter. So 3 quarters lower total. But people are like, oh, so rates came down 3 quarters. Well, actually they didn't. So the Fed funds rate is kind of what banks lend each other on the overnight rate. The mortgage rate is more based on the 10-year treasury, the mortgage-backed security market. And so, those markets kind of go off of more of like what's going on with jobs, inflation, like what's going on in the economy. Also like what the Fed does and what they say. I mean, sometimes what they say after their meeting can have a more effect on rates than what they actually do, and so basically, it just rates they didn't come down as much as they thought. Inflation didn't come down as much as we thought, so rates didn't come down. One of the big things that I think is lagging with inflation is housing costs. It's a big factor of when they look at all the inflation numbers. But they kind of go back 12 months, and each month it goes down. So we're lagging a little bit, but I think that's going to catch up. And when we see some of these inflation numbers lower, then I think the Fed will feel more comfortable. They may lower again. We may see overall, interest rates come down. When there's weakness in the job market, which we're starting to see a little bit too.
Yeah.
Even though the Fed, this last meeting, January 29th, they said, we're stopping for now. And they said, the economy's in good shape and there's lots of jobs.
So they said basically,
Yeah.
I'm sure you've heard this a lot lately. They said they're not lowering the rates anytime soon, and maybe not even this year.
Yeah. And so I think they're going to have to wait and see. I think a lot of it too was the new administration, Trump coming in, and they wanted to see what's going on with all that. And obviously he's doing a lot of things. And so we have to see how that affects like inflation, job numbers, things like that. But over this last week or week and a half, we've seen a little bit of improvement. The Fed did come out and say that they're going to kind of still stabilize what they're, when we, as a country, when we're spending money, where does that money come from? We go to the treasury markets and the mortgage-backed security markets. That's where all that money comes from. So like when there's a bunch of supply and we're spending tons of money, it's hard to have those yields go down,
Yeah.
And so, but we hope that will improve a little bit. Like a lot of analysts are saying that we might see, mid 6s, low 6s, maybe even high 5s. So
okay,
5.8.
After saying all of that about interest rates,
Yeah.
and kind of a little bit talking about what a seller's market is, what a buyer's market is, if somebody were to come to you right now and be like, hey, I really want to buy a house. I don't think that I can. I'm scared too. I don't want to get into this market. I'm nervous. It's too high. It's too this. It's too that.
Yeah.
What would be your first response to them?
Well, I think I would talk a little bit about, yes, the rates are higher. Your payment's a little bit higher than what it would have been 3 or 4 years ago with rates being so low. But you have to look at the big picture with the appreciation and what you're getting there. Like over 5 years on a median price home in Utah, now that's $150,000.
Yeah.
That is substantial.
Where are you going to make that kind of return?
Yeah. So having that appreciation and that 150,000 over 5 years, that's a lot of money, you know. So I talked to him about rates. I talked to him like obviously they need to be comfortable. Like the affordability factor is worse.
But
hard.
I mean, people are paying so much for
tough.
rent.
Yeah, but
That's
rent.
the other thing.
There are houses around that are $5,000 a month. You know.
Yeah, I mean, and rent just keeps going up.
2,400, 3,000. You know, for
So why don't you
rental.
pay yourself?
Yeah, so I talked to him about the rates and said, hey, look, they are higher. I think there'll be opportunity over the next couple of years to where we can lower your rate. There's a lot of opportunities and ways that we can refinance. As a mortgage broker, we have the ability to, one thing that we do for our clients is constantly track that for them. Like once we close your transaction, that's just kind of like the beginning of our
relationship.
Yeah. So like that listing you were talking about, I'd known that client for like 20 years.
Yeah.
Like, right. So
yeah.
Yeah.
It's been
So
awesome.
yeah. So that's what we do. Like we will always evaluate that for you. Like in September, rates dropped a little bit. We had a lot of clients where we just called them like, hey, we need to lock the rate. We're going to refinance. We can save a 1%, and lower their rate and stuff. So I think that there's an opportunity there in the future to do that. But at the same time, I think the appreciation is where you're going to see like you're going to be happy about that because you're building a lot of wealth there.
Well, and I always say to my clients, just because I know that there's a lot of uncertainty and I feel like there's all these people that, are like timid about it. But I always say to them, I'm like, listen, all you have to do is meet with a lender. You need to take all these factors out of it, all the media, everything what everybody's saying, and just meet with a lender, see what you can do, see if it's something that makes sense to you. And if it is and you feel comfortable, do it. Don't shy away from it because you'll never regret jumping in. You'll always regret not. And we have a client that wanted to buy, and we looked at several houses. I think you've talked to him several times.
Yeah.
I think he ended up buying something in St. George for an investment property. And then there was a house he loved and he wanted to buy it. Well, he didn't buy it. And a year later, that house was worth $75,000 more. I didn't think it was a full year. And he was kicking himself because he was like, I'm going to wait for the interest rates to go down. I'm going to wait for the interest rates to go down.
Yeah, we certainly don't want to like push anybody to get something like a payment that it's going to be really painful for them to pay, even though we can approve them. But we talk to them about different strategies, about if they have debt or different things that they have that we can maybe restructure or help them try to figure out a way to
make it more affordable.
Make it more affordable or do. We've had a lot of clients where we've helped them redo car loans and different things or just do lots of different things that we can help them try to make that payment more manageable,
I think like we've said in the beginning, this relationship isn't just about buying or selling a home. It's not about getting the loan. It's about a relationship that we've built with our clients that lasts for a long time. I mean, we have clients call us all the time, for other things just other than real estate, which...
Yeah, you've had some crazy ones, right? You've had some...
I think we both have.
Yeah, we've had some different
I think we both have had some
situations where,
but I think we've always... Even though those relationships, we've come through some hard things, I feel like we've helped them see. And I mean, like the guy that you had a relationship, for 20 years... I now have a relationship with.
Yeah.
And we, on Christmas Day, we wished each other Merry Christmas. Like it's a whole different level of people you get to know that you otherwise wouldn't have.
Yeah.
So
I think like the whole buying process can be stressful, but like getting through all that and everything, like the fact that they'll call you back like 6 months later, a year or two, and ask you something not even related to real estate sometimes is like a really cool thing, because that shows that you really build a relationship with them. They're thinking about you, like when it comes like, and maybe it's a marriage thing, and they're worried about their house and what are they going to do, and they call you, am I going to be able to sell it? Or they call me about what are we going to do with the mortgage if something happens, and unfortunately things like that happen, and so it's cool to see them call you back and ask you about this stuff, even because they're having a problem and they're thinking of you like, hey, I need to figure this out,
Well, I mean, I think the latest one that I think has kind of been forefront in my mind lately, and it's been going on for a couple months, but he bought a house, he had a family, or I guess he had a girlfriend that lived with him, and it didn't work out. Well, she was able to kick him out of his own house. She was able to get him out of his own house. She got a restraining order against him. It took us 3 months to get him back in that house and have her evicted. And it was a process. That's crazy. But the fact that he trusted us, because now he's like, I want to sell this. I want to buy a new house. Yeah. But he has, it's amazing what kind of phone calls you get, because you and I are both definitely more than realtor loan officer. Yes. We've done... I've picked up people from doctor's appointments. You've taken unlimited phone calls of wrath of things that
sometimes people get stressed. Control. I mean, so they come to me, they're talking about finances, and like nobody wants to talk about their finances. And they come to me and like, I'm asking, what is your credit score? What debts do you have? How much money do you have? Where are your bank accounts? I get all their bank accounts. I need all the pages. And then the underwriter is asking questions about what are these Venmos? What are these Venmos for? And like, you're literally divulging everything. It's vulnerable.
Personal.
It's very personal. So we try to make that as comfortable as possible, because
we're told not to talk about these things.
Yeah, you don't talk to your friends about that. No. Go out to dinner like, hey, what's your credit score? Yeah. How much debt do you have? Like, do you have money in savings?
Maybe that should be the norm now.
It's stuff that, you like the personal things, and so they're coming to you and you ask them, like right off, you're asking them all these questions.
Well, and then not only that, then you find out stuff that they don't even want you to know.
Or their spouse wanted, like, what? You have this debt? No. Like,
where did that come from?
Yeah.
So let's get back to this whole, tell us how, because, we've talked about buyers. What are kind of the steps? We've talked about pre-approvals. We need to know what this actually looks like.
Some of these things, we want to talk a little bit about some of the things that you need to avoid when you're trying to buy a house, right? And I think one of the first things that I can think of is that people get online, like they're like in the middle of the night, they can't sleep, and they're like, I'm going to buy a house. And they're thinking about buying a house, and they start pulling up houses, and they're like, oh, I'm going to call this agent because I want to go see this house, And so they text you in the morning, let's go see this house, and you're like, well, what, are you pre-approved, right?
Yeah.
Like, can you afford this house? You don't want to fall in love with this house and then not be able to buy it, right? So I think that first step is, getting pre-approved. And so there's like getting pre-qualified, like, hey, we ask you about some information about your job and your income and different things like that. And then we're like, well, yeah, it looks like you can qualify for $500-600 or whatever it is. And then the next step is actually doing the application, running the credit. We have the credit scores, we have your pay stubs and your income and your assets and everything, and we've evaluated and say, okay, yeah, it's definitely like we can definitely approve you, And so that being pre-approved is kind of a really, really big step, I'm sure you've had experience with clients wanting to go see houses, right?
Oh yeah, I have a client that wanted to see a house, and most of you know what Zillow is.
Zillow.
They like to tell you, if you bought this house, this is how much it's going to cost you a month. Well, what people don't know in the fine print is that is with 20% down. That's not including your insurance and your taxes, and people don't understand that. Like, how many times have we had to explain to people, okay, this is your entire payment. This is what this includes. And they're like,
are all these things being added onto the payment? Like,
they don't
you go buy a car and they're like, here's the payment. And then there's taxes and titles and fees and all this stuff.
There's all this stuff. So now your payment was $2,300. It was showing $2,300 online because that's, what they said it's going to be. But really, it's now $3,200 because you have your insurance, your taxes, and not to mention that you're not putting 20% down.
So you might have mortgage insurance.
Yeah. So, and then
what could go wrong if you're not pre-approved and you're just adamant
They're
about
going to
buying
fall in
the
love
house?
with the house. I get that all the time. They
Yeah.
fall in love with the house. They want to go buy it. They think they qualify for 800,000, and then they come back and you're like, "Oh, we can get you pre-approved for 4." And that changes the whole outlook
Yeah,
of the whole process because
reality.
yes,
Like,
we can find you a $400,000 home. We can't. This is not the one. And so having to change your location, your wants, and all of that changes. But
yeah.
and sometimes that can be hard. That's why I always we instruct our clients, or we ask them, I should say, I don't want to say instruct, but we say, hey, come in and meet with us.
Yeah.
Let's meet, let's talk. Let's see if this will be a good work relationship for all of us because
Yeah, I think like I know we've had so many conversations with clients together and they're talking about like, I want this, I want 5 bedrooms, I want this, I want extra garage in the back, I want all this space. And you're like, you're not going to be living in Salt Lake. You're going to be living in these other areas. And after talking through them, you bringing up homes and you're like, wow, I do like that one. Oh, okay. Yeah, I could move out a little bit further or move somewhere different because, and I think going through that process is helpful because then we can give them reality, right? Like you can tell them what the reality is. Like, okay, if you want this, you're not going to live here. You're not going to go up in the avenues and buy a house or this and that for this price, or you're not, you're going to have to live in a different,
which I think also helps build trust with these people.
Yeah.
Like I feel like when I'm in front of people, I have a good perception about their personality. I can get an idea of what they need or want, and they can trust us. They know that we're there to help them and guide them, rather than to just be like, I want a house. Okay, well, guess what? I need a paycheck. Let's get,
And I think on my side and your side, I think people really, really appreciate just being upfront, straight, like from the beginning, like because you can't get their hopes up that they're going to buy a brand new house, new construction, exactly how they want it.
No.
For this particular price.
No.
And when you go see these prices of builders, it's like that's the base price. It's going to be $50,000 more than that when you want tile or anything else in the house,
Well, and that's something that we've talked just recently about, because you have to have a budget when you go into a new home, like gallery or whatever, because you have to say, these are the things beforehand. If you can get your hands on all the upgrades beforehand, so before going in there, because they will, it's like walking into the candy shop.
Yeah. We have a client going in tomorrow, right? To go through a little bit of that process and start thinking about the extras and the different stuff. And
and you have to be able to stay within your budget. But let's go back to loans. I talked about 20% down.
Yeah.
Now, does everybody have to have 20% down?
No, you do not need 20% down.
Well, and the other thing I always hear too is I've already used my FHA loan. What does that mean?
Okay, yeah. So first of all, you do not need 20% down. First-time home buyers, people buying their first house, rarely have 20% down. And so 3% down, 3.5% down. There are some areas and some types of programs where you can do very limited down, 1% or even no money down in certain circumstances. But like that, I think that's something our parents taught us. Like you need 20% down to buy a house. That's maybe 70s, 80s. Maybe they were talking about that, but prices of homes were only 60,000.
You weren't getting.
And so, I think that's a big thing to remember, that you do not need 20% down. But there's a lot of different options. But talking about FHA, we use FHA a lot with first-time home buyers because it's forgiving on the credit. You don't have to have perfect credit. And a lot of first-time home buyers are starting to build their credit. They're just starting in their careers. They need a little bit more give and take in their approval than maybe somebody buying their second home with a bunch of money from the sale of their house. And so, FHA loan it's not, you don't have to be a first-time home buyer. You can't usually have 2 FHA loans. So like if you use it at the same time. So if you use it and then you sell the house or you change that mortgage and then go buy another one, you can do an FHA loan.
Sure.
That's
so a conventional, it has a conventional loan. You can do a 3% conventional, 5%, 10%, 20%.
Exactly.
And any percent in between any of that.
Exactly. Yeah.
Okay.
But pretty much, like, if you're going to get better terms if you have 3% down or 3.5% down. Like if somebody comes in, we go through this process all the time with these clients. Like we don't have any money down, But what do? We ask them a bunch of other questions like, hey, do you have a car you can sell, or do you have a family member that maybe can be willing to gift you? So an FHA loan allows gift for the down payment, And then another one that we've used several times is people have money in their 401k.
Yes.
And a lot of people, first-time home buyers, don't understand, like, hey, they can take a loan against their 401k to buy a house.
Yeah.
And
I think they're afraid they're going to get taxed or something.
Yeah, and everybody's 401k is different, but like we've had a lot of clients do that, and they're like, oh yeah, and I called them and they said, yeah, I can do this.
Yeah,
and it makes a big difference.
And you're good about helping them through that process.
Yeah,
I know a lot of people are like, I have no idea.
Here's what
how do I get that out?
This is probably how it's going to work. This is probably what it's going to look like. So
now, what happens if people? They might have credit, but they haven't had credit for very long. What does that look like? Because is there ways to kind of help that process along? What can they do? What are some of the things they can do?
Yeah, we should probably talk a little bit about credit. Like credit is really important. Obviously, everybody knows, hey, your credit score is important. Everybody has their credit score on their credit cards, their bank apps, things like that. And so getting that to, a good level is good. But like we said, like first-time home buyers, sometimes you're just getting established, or it's not a perfect world. I mean, there's been how much are eggs right now? It's crazy. Inflation's crazy.
I'm rationing
Life
my
is
egg.
expensive.
I think you have chickens. Can I come by?
Yeah, we do. But everything's double. Your utilities, all these different things. So things happen. There's a late here or late there on a credit card or something, or on a car. So it doesn't have to be perfect. Like I said, FHA, you can have some lates here and there. They like to see the last 12 months clean. But if you have a 620 or a 640 or a 680, or even down to maybe 580, you can still consider buying. And then of course, if you have great credit, you're in the high 700s, and then that obviously helps a lot. Keeping your credit is so important. And something that we do a lot for our clients is like when we talk to them, they're like, I don't know, I had some problems before. I don't know what my credit is. What we can do is we pull their credit, and then we can say, okay, it's not where it needs to be yet to be able to buy, but we can give them specific instructions. Yes. Like we can go through kind of what if simulations with the credit bureau and say, okay, if we pay this down this much, we get this laid off. Surprisingly, some people will call places and they're like, yeah, we'll take that off for you. Yeah. Like it happens. It doesn't happen all the time, but so people can take stuff off their credit, or we can help them through that process. So then like they can get to the point where they can buy. You've
always been good about making sure that people understand their credit report, making sure they know like what that looks like. And you can also be like, hey, listen, if we can pay this to this point or pay it off, I can have your credit score jump this many points.
Like somebody may have like a small $500 overdraft credit card on their credit. If they pay it down $250, like in half, then that could improve their score a lot. Revolving to debt credit limit is really important on credit scores. Yes. And so little things like that we'll have them do, and we can do a rescore. We don't have to wait like 60 days
to be able to see it,
to redo it. Yeah, we can do it like within a week and get their new score back,
I think we could talk about credit forever.
A long time. So we talked about...
I'm just saying that because there's so much involved in that process.
We could talk a whole hour on that probably.
I mean, there's so many people that pay cash for everything. And you're like, that's great. Because let's be honest, this credit thing can be a double-edged sword, but they need to have it.
Yeah.
But you want people to pay cash because you don't want them to be in debt. We want that debt ratio to be low.
Yeah, you have to manage your revolving debt scenario in a good way, so then you're paying it off hopefully every month. So then you have a good history, because you do need a good credit score in today's world. So we talked a little bit about being pre-approved and stuff like that.
What's a pre-qualification?
Well, what I want to ask you is like, why do you need an agent? Why can't they just go see the house themselves? They see it online, and I'm just going to go see it myself because I'm here. I can't get a hold of this agent or whatever, and I'm just going to go and drive and see the house. Like, why would they not want to do that?
Well, I mean, I can tell you lots of scenarios why clients have gotten themselves in trouble for not using an agent or for trying to do it on their own. I've had a family member that sold their home with a discounted for agency and called me 6 months later because they were getting sued. And I'm like, oh, what's going on? Well, they didn't disclose some stuff on the seller's disclosures. And what people don't know is if you don't disclose something, you can have the person that didn't disclose can be sued up to 3 times the value of the damage.
Oh, wow.
So she's like now backpedaling, trying to figure it out, trying to get out of this scenario. And I'm like, sometimes it doesn't always help to go with a discount brokerage because you're going to end up paying more in the long run. And so...
But are the contracts really that hard?
Well, contracts are a big deal.
Yeah,
That's the
absolutely.
thing. And you have to know what you're doing. And if you don't have somebody in your corner explaining that to you and explaining your rights as a buyer or a seller and protecting you, that's a big problem.
I've seen you do this like over and over again for clients, like where especially, part of the process is getting a home inspection. You inspect the house and they come back with all these things. And like, sometimes that can be hard for the seller to admit, like, first of all, that they have any problems with their house.
No,
and second,
all of our houses
and second
are
of all, them wanting to fix them. Like, tell me, like,
So,
why is it,
You need to look at the inspection report and decide what's the most important things to you. Because an existing home, just like an existing car, just like anything that's been used, it's going to have its issues. You and I both know that. So what's the most important to you? I mean, we obviously know foundation's a big issue. That can cost a lot of money.
Absolutely.
Roofs can cost a lot of money. You have like your bigger items, your AC, your water heater, furnace, all of those things. Those can be a big ticket item. And so those are things that you definitely start to negotiate. Now, like imperfections, like when there's, light bulbs are out or, it's not painted the way you wanted it. Those are all cosmetic things. And those are things, you need to go, okay, what's the most important to me? And that's why I'll definitely help them through that process. I have had clients which I strongly have disagreed with and told them not to do this, not do an inspection. And every single time they haven't had an inspection, something happens and they're calling me. Yeah.
And I think, like, I've seen you negotiate with sellers, and sometimes I'm like, wow, you got them to pay, like, do a whole new roof. Like, they're getting a new roof, they're fixing all these things, and that's what an agent does.
Yeah,
that's what an agent does, and that's why it's so important to have one. Like,
well, on both sides, because if I'm a seller's agent and the buyer comes to me and wants me to help them as well, so I'm dueling the process. Yeah. The thing is that my loyalty will lie with that seller because that's where my contract started. Yeah. Now, does that mean I'm going to steer the buyer in a bad direction? Absolutely not. I'm going to do everything I can to make sure that they're feeling like they're getting taken care of because that's my job. But at the end of the day, I started with the seller, and that's...
I think we've dealt with a lot with new construction. We have some current clients that had a smaller builder, kind of inexperienced, have major issues, take 6 months longer. Like we've dealt with a lot of new construction stuff over the years, but there's a lot of new construction in Utah, and so people like will go to the open houses or they have all those model homes, right, to go and look and stuff, and so when you walk in there, like they try to reel you in, like, and kind of like say you don't need an agent, we'll like represent you. Like, why would you want an agent, especially with new build? Like,
I feel like new builds they're great. New homes are great. It's nice to have a new home, but I think it goes both ways with new builders because they also are like, you build with me, you have to use our lender, you have to use our title company. There's so many things with builders that you have no idea that you have rights with.
Yeah, and if they have their own agent, they can manage those correctly.
Yeah, well,
they won't get,
Not to say that you need to know what they're actually giving you, what they're promising you and what they're not, what they're saying and what they're actually doing, and what corners they're cutting.
And like when it gets to the very end, you're doing a final walkthrough and there's a bunch of stuff that's not done. Like you're there to be mean with the builder because the borrower or the buyer doesn't want to go and,
Well, they're timid about it.
Yeah,
they're
like you can go in there like, look, all this stuff needs to be done. Like before we even sign, like don't even think about we're signing tomorrow when all these stuff are blue taped. There's a bunch of stuff everywhere. You're there to like make them get that stuff done because if you close.
And I don't think that a lot of people understand that. I think they don't understand what their rights are as a home buyer as well as what they are dealing with. Because the new construction, they don't have to tell you anything unless you ask. Like they're not, I mean, they'll tell you what's in the house, what's included, what's this. Yeah. But like when I built I didn't build my house. My house was a spec home. And so we got all the specs on it that was put in. And when we had an inspection done, they said they put all this, insulation up in the attics, like a certain amount.
Yeah.
Well, when we got up there, the inspector got up there, it wasn't what they said. So what are they getting away with? They don't have to put more in if they don't have to.
It's up to code.
Yeah,
right?
it's up to that code. But so there is that when you're definitely looking at new homes. The other thing is we had a client that they could approve them, but you could do better. You had a lot better rate. You could give them more options.
Yeah.
And we had asked for closing costs that they were going to give us, but they were like, "Oh, we won't give it to you unless you go with our lender."
Yeah.
But I talked to the owner
You
of the
literally
company,
went to the builder's office
and I was
and
like,
demanded they
No.
are going to get this incentive because I was like 0.5% lower in rate. Or a
well,
little
everything
more,
was. I think even the
lower
closing costs were lower.
And so it was much better for the client,
And I even put my commission up on the line. I said, "Listen, you
Yeah,
don't have to pay
yeah.
me if he will not."
Yeah.
I'll walk away from that because I was that confident that we could get it done.
Yeah. Yeah.
That's how confident I was.
Yeah, just a quick note on preferred lenders. Like when you go to a new build, they seem to always have a preferred lender. We'll give you this incentive, but I mean, sometimes it's a good deal. Sometimes we can't match it, and legitimately it can be good sometimes. But a lot of times, it's a higher rate. Like, hey, we're going to give you a credit of $2,500 or free appliances or whatever it is. And when we start looking at all the details, like sometimes it, like we said, like 0.5% higher in rate. Or, their closing costs are a lot more. And so when we do a comparison, we're like, look, this is what we can do. And I'm a broker, and maybe some people don't know, if you go to your bank or your credit union, they have, this is what they do. This is their rate. That's they don't have a lot of options. This is what they are offering, right? As a broker, we have wholesale lenders that we worked with for years. We can shop different ones. Sometimes one lender that we work with is priced very low. Maybe the next month, another one's better, we have lots of different options and generally we can always, come in much lower.
I don't think you've ever, anybody we've worked with, because we encourage our clients to get more than one
estimate. Sometime. Yeah, absolutely.
And send it over. Let us look at it. We encourage
if they have somebody they know or they're talking to somebody already, send it to me. Let's talk about it. Let's compare it. I'm never afraid of comparing, different estimates that they might have.
Well, I think one was the boyfriend was a lender. And he hadn't said anything to her, but when you got involved, all of a sudden he knew all about it. But he still couldn't beat your rate, and so she ended up going with. I think there was 3 lenders involved, you included, that ended up. One of them got mad. I think that he called both of us and basically told us.
He was very upset
because he lost the deal.
Later, he apologized. But I have clients that basically work for a bank and they can get special deals, right? And I'm a lot better. They always use me for their houses, and I'm like, oh, we won't tell anybody at work what I'm doing. But
you always, and which that's one of the reasons why I'm grateful that our paths crossed, because I think our very first client that we ever did, I had used a different lender and I could not get them qualified. And
they said it wouldn't work.
I remember I came up to you. We were at the same place somewhere, and I said, "Do you think you can get this done?" And you're like, "Absolutely, I got it done." And it was not. And I will say, it was not easy.
That one was not easy. I remember. And we were just talking about that client this last week because they're doing some things, stuff. And so we were helping her dad do some things. But I think because all the lenders that we have, we have a lot of different options. I mean, we had a client recently they had bought the house under contract 7 years later. He thought his job and income would be all great by then. Well, it wasn't. We couldn't count any income. Self-employed, writes it all off. So I'm like, you have to pay this guy off. Yeah. So we had a loan where he didn't really need to put his employment down. It was a really low loan to value. So he had a lot of equity in his home. So we were able to get it done. But there's just a lot of different options. When you go to a credit union or a bank, they're like, here's what we have. Oh, you don't fit it. Okay, sorry.
It's black and white.
For us, it's like, we have lots of options. Let's make this work, And if it won't, then we'll tell you how to fix it,
Well, that's the thing. The other thing that people need to understand too is these options, they're not going to put you in a spot where you're going to be in your house in a couple years and it's
Yeah.
you know, you have to short sell. It's not going to be that kind of a scenario. You're putting them in a situation.
Still
that's-
good loan.
yeah,
Yeah.
a good loan that's been qualified.
Yeah. I was
So go ahead.
I was reading the other day about how what percentage of agents did one deal or more this last year.
Okay.
70% didn't do one deal.
70% of agents in Utah or just across
in Utah
the board?
didn't do one deal last year. You know, so it's been a harder market, right? And it's been, you know, you've had to work hard for your clients and you had to be out there and stuff. But there's been a lot of comments about that because the kind of agent that you're working with is important,
Yeah.
right? And so you obviously did way more than that. You did.
Well, yeah.
You did a lot
I think-
of transactions last year, and so talk to me a little bit about why it's important to work with an agent that has experience, like because I'm sure you've had clients say, "Hey, I'm just going to use my brother." And you look, and we can look them up, and they're like, "Oh my gosh, he hasn't done a deal in 3 years." Like, why would that matter? Like,
Well, I think it matters lots of different ways. I feel like, you know, having experience in the industry, knowing what you can ask for, knowing what you can fight for, knowing that buyers don't need to be trampled on or sellers don't need to be taken advantage of. I mean, just actually, I mean, a lot of people will go to real estate school. My son went to real estate
get a
school last year.
license.
And after he was done, I was kind of mentoring him and showing him how to write a contract. And he's like, we never learned this in the school. And I'm like, I know, they teach you law.
They teach you all the laws and stuff, but not the real life
not
stuff.
how to actually do the work.
It's the same in mortgage, yeah.
I think that is an eye-opening experience to a lot of agents, is that it doesn't matter that you went to school. You have to learn the industry.
You have to do the work. You have to get out there and do the work. And surprisingly, like when I saw that figure, I was like, wow, that's a big figure. And on the mortgage side, 49% of the loan officers this last year did not renew their license.
Those numbers seem
crazy, you know.
So way higher than they should be.
So who you work with is important because people that have experience and know how to get things done, that have good, past client, relations and reviews and different things like that. It's important.
You can't.
I just wanted to kind of make that point,
Well, no, you can't be in a transaction and lose somebody's earnest money. Like as an agent, I have never lost an earnest money. I have always let my clients know along the way, this is where we're at in the process.
Yeah.
You have this many days, or we're at the end. Are you good to move forward?
Yeah.
And if you let that happen, there's a big, huge trust issue.
Yeah.
I mean, it's a big deal.
You have somebody losing thousands of dollars. It's a really big deal.
Well, and they're spending lots of money.
It's a big transaction.
Yeah, it's something that even along the way, you've put your earnest money in, you're paying for inspections, you're paying for appraisal. There's a big emotional attachment to this, and it's financial and it's personal. And so you have to protect all of your clients.
Yeah.
You have to make sure that they're understanding that process. And if you're just an agent because you think, oh, I'm going to go get my license because
make good money. Agents make a lot of money. I saw
they
them.
don't. You work.
You work hard.
And you're on vacation and you're working.
Yeah, you're working 24/7 basically. Yeah.
And sometimes people are mad at you, like family members are like, do you really have to take another call?
Yeah.
But you know what?
It's hard, yeah.
You have to figure out that balance, and you can, but it's also a huge reward when you see some of those clients and you read the reviews people write you.
Yeah,
like
they really appreciate it.
And you're like, oh, like you knew you did a good job, or you knew the transaction went well. You knew you got it closed. But then you read the review and you're like, oh, this means a lot more to both of us now.
Yeah. Yeah. We've had a lot of clients that at the end they're just so grateful to be in their house, and it's
and then they start referring you.
And sometimes they don't think that they could have ever bought a house,
I know.
And now they have that security, like they're in this house and they don't have to worry about moving or what the landlord's going to do
the couple that got the grant. So really quick, just
the
Utah grant.
real estate
Utah
grant.
has a grant that you can apply for, and it's $7,500 towards your closing costs, towards your down payment. You can use it for whatever. And I had a client that was awarded that grant. And when I told him,
it's like
he
a
was
lottery
like-
thing. It's so hard to get.
Yeah.
Too.
When I told him he got that, he was like, "You're kidding me. I never get anything. I never win any." Like, he was so excited. But his wife is like, she couldn't believe they could get a house.
That was a hard transaction.
Yeah.
We had a lot of things pop up and different things. Like, for instance, a judgment that the husband didn't know about that maybe she forgot about.
What is a judgment, Scott?
Yeah. So a judgment is something that, and different things get reported on credit and others don't. But a judgment is where you either owed somebody something, a debt, or maybe there was a lawsuit or something like that. Usually it's a debt or something that happened and you didn't pay it, and it goes to judgment, and then it's on the county record, like, you owe this.
Mm-hmm.
And sometimes it can just sit there. Like, sometimes it's a judgment and nobody's trying to collect for it, but it's there, right?
But you can't buy anything.
But what happens is like, yeah, when you go to get your mortgage, you're like, because we have to pull the title, we have to check like your social and different things about judgments and things that might be out there. Have you had a bankruptcy or different things in the past that we might need to be aware of? And yeah, this particular one, yeah, the wife had something that was many years ago that popped up, and so we had to address it, and
But it didn't end there, because remember, we closed.
Yes.
And then we found out he got a car loan.
Yes. So that's another thing. We're running out of time for talking about stuff, but it's important, like, to not change your job, right? So don't change your job
Unless you tell us and it's the same amount of money.
Or maybe you're making more, but we've had people like, we're about ready to close, and they called to do a verbal verification of employment because they had to verify employment, and they're like, "Oh no, he doesn't work here." And we're like, and then I call I'm like, "You don't work here?
Where'd you go?"
Working? Like,
I quit my job
I moved
30
over here
days
this
ago.
last week. I didn't tell you." I'm like,
No, you can't do that.
Tell me this stuff. But yeah, like, so we're on the phone, right? And we signed that client the day before. We're getting it recorded the next day, and because we signed late in the day, and I'm on the phone with you, and then I get an email from the lender. "Oh, what's this new $700 car payment?" And I was like, "Hold up, I'm gonna have to call you back. This might not be closing today. We're getting recorded." And yeah, like, he had mentioned something about a car, but he didn't tell me he did it, so I assumed he didn't do it.
Well, we had
do
talked about it, and then he was like,
He's
far
like,
as we
"Oh,
knew,
yeah."
he didn't do it. But
right?
then he was like, "Well, I
did
just
do
did
it."
it.
I'm like, "Oh my gosh," so we had to like scramble that day,
And we did. That's
you
where
gave some, I gave some,
Yeah,
we all
all
gave some
just
to try to
came
make
in.
it work, and in the end it did work, and I think they're very happy.
they are. And I think the fact that they were able to buy a house was life-changing for them.
Yeah, it was absolutely. Yeah,
And they love it there, and just
yeah,
I still chat with them here and there. But okay, so we have so much more to talk about.
we do. Like, we
can
only
talk-
have like 3 or 4
I
minutes
know.
left. This is
and
crazy.
so I think that we should address some other issues. I think we can get on and do it again, and
Absolutely, yeah.
and have certain topics. And if there's any topics that you guys want to hear from us or want to understand more, we would be happy to go into
Absolutely.
detail about that. But I think we have a lot of information that really could help a lot of people.
Hopefully this has helped people just kind of realize some of the things that they need to consider when buying a house. When it comes to the mortgage side of it and the real estate side of it, it's important to have a good team. You need a team.
I think that's the word right there.
Yeah.
You need to have a team where the agent and the lender have worked together, and they know how to do the job and do it right, and they trust each other. And I think that's a huge deal.
Absolutely. Yeah. Well, if you guys have any questions or comments, comment below or whatever, and we'll try to address it this next time. But
Well, thanks
thanks,
for being
Miranda.
with us.
Thanks for